Hey friends, Arthur here. Let's get right to it. A shocking number of life insurance policies, some studies say as many as 85%, never actually pay out a death benefit. They just fizzle out. So, are you putting your hard-earned cash into a brilliant safety net for your family? Or are you lining the pockets of a multi-trillion-dollar industry betting on a contract you'll never collect? It's one of the biggest and most confusing questions in personal finance. On one hand, it's pitched as the ultimate act of love and responsibility. On the other, it's called a flat-out scam, preying on our fears. The truth is buried under a mountain of jargon: term life, whole life, universal life, cash value, premiums, riders. It's enough to make your head spin. It's no wonder that a huge chunk of Americans who need life insurance, about 100 million people, don't have it or don't have enough. And the number one reason people don't buy it: they think it's wildly expensive. In fact, about 3/4 of Americans massively overestimate the actual cost of a simple policy. So, what's the real story here? Is it a waste of money? Or is it the smartest financial move you could ever make? In this video, we're cutting through all the noise. We lines break down exactly what life insurance is, how the main types actually work in simple terms, and uncover the surprising ways a policy can benefit you while you're still very much alive. We'll even tackle the big question: who truly needs it, and who is better off just investing their money instead? By the end of this, you'll have the clear, straightforward facts you need to decide for yourself. Let's dig in. 1. The 60-second breakdown. Alright, let's strip this down to the bare metal. At its core, life insurance is a giant pot of money. In 2023, for instance, life insurance companies paid out a staggering $89 billion in death benefits. That's the bedrock of this whole thing, a massive, legally binding promise of cash. Here's how it works. You make small, regular payments, called premiums, to an insurance company. In exchange, the company promises that when you die, they will give a person you've chosen, your beneficiary, a big pile of cash called the death benefit, as the strangest subscription service you'll ever buy. You're paying, say, $30 a month, not for streaming movies, but for the peace of mind that if you get hit by a bus, your family gets a check for $500,000. And here's the kicker that makes it so powerful. In almost every case, that massive payout is completely, 100% income tax-free. Your beneficiary gets the full amount, no questions asked by the IRS. Now, this is where it splits into two main flavors, and where the scam versus protection debate really heats up. The first, and simplest, is called term life insurance. Think of term life as renting protection. You choose a term, usually 10, 20, or 30 years, and you're covered for that period. It's straightforward and, because it's temporary, it's incredibly cheap. We're talking about a healthy 30-year-old potentially getting hundreds of thousands in coverage for less than $1 a day. But here's the catch, and the argument for it being a scam: if you don't die within that term, the policy expires, and you get nothing back. The money is gone. Poof. You essentially lost the bet. A staggering 99% of all term policies never actually pay a claim because people outlive them. The other flavor is called whole life insurance. This isn't renting, this is owning. It's designed to cover you for your whole life. As long as you pay your premiums, the policy never expires, and the payout to your family is guaranteed. But here's its own catch. Whole life is way more expensive, often costing many times more than a term policy with the same death benefit. Why? Because it combines that death benefit with a built-in savings or investment account called cash value that grows over time. So, you have two paths. One is a simple, cheap, temporary bet against your own demise. The other is a complex, expensive, permanent tool that mixes protection with a savings plan. One fizzles out, the other lasts forever. This is the fundamental choice, and it's where millions of people either find security or get completely fleeced. 2. The financial armor argument. So, why on earth would anyone buy a product that usually expires worthless? Because for a huge number of families, it's the only thing standing between them and financial collapse. According to one study, nearly half of all American households would face serious financial hardship within just 6 months of losing their primary breadwinner. For more than a quarter of them, that crisis hits in 1 month or less. This is the core argument for life insurance. It is not a lottery ticket. It is a suit of financial armor, custom built to defend against 3 specific catastrophic attacks that happen the moment you're gone. First, the giant slaying sword, wiping out debt. The single biggest debt for most families is the mortgage. In the U.S., the average balance is now over $264,000. A death benefit can vaporize that entire debt in a single, tax-free payment. The house is safe. Period. That is a level of security that is difficult to overstate. Second, the unbreakable shield, replacing your income. The mortgage might be gone, but the lights still need to be on. The car needs gas, and the kids still need to eat. The death benefit acts as the financial bridge, replacing years of your lost paycheck so your family has time to grieve and adapt without the panic of immediate poverty. And third, the final farewell fund, covering your own exit. Let's be blunt, funerals are shockingly expensive, easily running between $8,000 and $10,000 for a traditional service. That is a massive bill to dump on a grieving family. Life insurance is designed to handle it, ensuring your last goodbye doesn't create their first major debt. So, when you look at it this way, the policy, in a bet you lose if you live. It's a calculated, defensive strategy. It's the ultimate what-if plan, designed to neutralize the worst financial shocks and give your loved ones the one thing they'll need most: stability. 3. The it's a scam argument. Alright, but what if that financial armor is actually a beautifully designed, incredibly expensive trap? This is the heart of the it's a scam argument. It is not that life insurance is useless, but that the type of insurance most people get pushed into, a product designed to benefit the seller far more than the beer. The argument centers on a massive conflict of interest baked right into the system: commissions. Let's talk numbers. When an agent sells you a simple, cheap term life policy, they might get a commission of 50 to 80% of your first year's payments. Not bad. But if they sell you a pricey whole life policy, that commission can rocket up to 110% of the first year's premium. Let's put that in real dollars. Say your term policy costs $50 a month, or $600 a year. The agent makes a few $100. But the whole life policy they're showing you costs $500 a month, or $6,000 a year. Suddenly, that agent is looking at a commission of over $6,000 for selling you the more expensive product. Which one do you think they have a massive incentive to push? This is why so many kitchen table conversations end with a recommendation for whole life. It's often sold as a fantastic 2-for-1 deal, a death benefit and an investment. The problem is, it's usually a mediocre version of both. The returns on the cash value investment part are often painfully low, sometimes failing to even keep up with inflation. In fact, for many policies, it can take 10 to 15 years before the cash value even equals the total amount of premiums you've paid in. Until then, your investment has a negative return, all while you're paying fees and administrative costs that are often buried in the fine print. You could often get a far better return by simply buying the cheaper term policy and investing the difference yourself. The second pillar of the scam argument is intentional complexity. Jargon like paid-up additions, surrender charges, and accelerated death benefits makes it nearly impossible for a regular person to understand what they're actually buying. This confusion isn't a bug, it's a feature. A confused mind is more likely to trust the expert sitting across from them, the one with a $6,000 incentive to sell them the complicated product. Think of it like this: term life is a hammer. It does one job paying out if you die, and it does it well for a low price. Whole life is often sold like a 100-piece Swiss Army knife with a blowtorch and a satellite dish. It sounds impressive, but it's heavy, expensive, and you'll probably never use most of the features. You just needed the hammer. And here's a dirty little secret many people don't realize until it's too late. You don't get both the death benefit and the cash value. If you have $1 million policy and you've built up $100,000 in cash value, your beneficiaries don't get 1.1 million. They just get the million. The cash value you spent decades building is absorbed back by the insurance company. It's a critical detail that is often glossed over in the sales pitch. Finally, there's the simple fact that for a growing number of people, life insurance is a solution to a problem they don't have. Are you single with no kids? Do you have no co-signed debts, like a mortgage with a partner? Are your parents financially independent? If you answered yes to all of these, who exactly are you protecting? If no one would suffer financially if you died, then paying a monthly premium is like buying flood insurance in the middle of the Sahara Desert. It's a great product, just for the wrong customer. Yet, policies are sold every day to young, single people who are told it's a smart investment to lock in low rates. So, the argument isn't that all life insurance is a scam. It's that the industry's commission structure incentivizes selling expensive, complex products that are often a poor fit, all wrapped in a language so confusing that it's hard to make an informed choice. They're selling the RV when all you needed was a sedan. 4. The verdict: do you need it? So, we've established that life insurance can be both a critical shield and a confusing, expensive mess. It all boils down to one simple, brutally honest question. Forget the sales pitches, forget the jargon. Just ask yourself this: will someone I care about be in serious financial trouble if I die tomorrow? That's it. That's the entire test. It's not about getting rich, it's about preventing ruin. Let's break down exactly what that trouble looks like, starting with the big yes. You absolutely needed scenarios. Scenario 1. The most obvious. You have kids. According to recent estimates, the cost to raise a child to age 18 in the U.S. has now ballooned to over $300,000. That's nearly $17,000 a year, and it doesn't even touch the cost of college. If your income disappears, who pays that bill? Without insurance, you're leaving your partner with a financial mountain to climb, alone, while grieving. And this includes one of the most overlooked financial heroes, the stay-at-home parent. They may not earn a traditional paycheck, but their economic value is colossal. Replacing their work childcare, cooking, home management could easily cost between $45,000 and $100,000 a year in market rates. If they were gone, the working spouse would suddenly have to pay for all of that. A potentially devastating new expense. Scenario 2. You share a major debt, most commonly a mortgage. The median home price in America is now over $400,000. If you and your partner co-sign that loan, your death doesn't make your half of the debt vanish. The bank still wants its money, and the full burden falls on your partner. A term life policy is the cleanest, fastest way to make that debt disappear. This also applies to other co-signed debts. Did your parents co-sign on your private student loans or your first car? If so, they could be on the hook for the entire balance if you pass away. A small policy can ensure your final gift to them in a massive bill from a collection agency. Scenario 3 is for the business owners. If you have a partner, life insurance is essential. A buy-sell agreement, funded by life insurance, allows your surviving partner to buy out your share of the business from your family. This is crucial. Your partner gets to keep the business running, and your family gets the fair cash value of your life's work. Not a messy legal battle or a business they don't know how to run. Even a sole proprietor might have key employees whose livelihoods depend on the business staying afloat during a transition. Key person insurance can provide the cash to keep the lights on and pay salaries while your estate figures things out. Now, let's flip the coin. When is life insurance probably an expensive solution to a problem you don't have? The probably not scenarios. Scenario 1. You're young, single, and have no major debts. This is the classic case of being overinsured. If no one depends on your income and no one would inherit your debt. Who exactly is the death benefit for? Paying a monthly premium here is preparing for a financial catastrophe that simply wouldn't happen to anyone else. Scenario 2. You're self-insured. This is a fantastic goal for everyone. It means you've built enough wealth through investments, savings, and paid off assets that your family could live comfortably off your estate without needing an insurance payout. Your nest egg has become your own private insurance company. At this point, you've won the game, and you can let your term policy expire. Scenario 3. Your mission is complete. Your kids are grown and financially independent, your mortgage is paid off, and you have a solid retirement fund. This is what term life insurance is designed for. It's a temporary bridge to get you to this exact point of financial independence. Once you're here, the need for that multi-million-dollar policy often evaporates. So here is the final verdict. Life insurance is not a scam. If you have a clear and present need for it. The scam part enters the picture when the wrong product is pushed on the wrong person for the wrong reasons, usually fueled by those giant commissions we talked about. Think of it this way, your job isn't to buy life insurance. Your job is to solve a problem. The problem is my family will be financially devastated if my income vanishes. The solution, for a specific period of time, is often a cheap, boring, term life insurance policy. That's it. So, don't walk into a meeting and ask an agent, "What should I buy?" First, answer the big question for yourself. Then, if the answer points to yes, You walk in and say, "This is the problem I need to solve, and this is the tool I need to solve it." You are in control. By taking 5 minutes to determine your actual need, you protect yourself from being sold an expensive solution you don't need. And you protect your family with the powerful tool they do. That's how you turn a potential scam into your ultimate protection. Now, if you'll excuse me, this fine analysis won't admire itself. If this video helped you cut through the noise, show some love to that subscribe button. Arthur, out.